Buy, finance, or lease a car? That is the question many people have, and it can be debatable. On one hand, advocating for purchasing a car emphasizes the advantages of complete ownership and cost-effectiveness over an extended period. On the contrary, leasing might appear appealing due to lower monthly expenses and the ability to enjoy driving a new vehicle. After conducting a comprehensive examination and evaluating the financial aspects of each available choice, I was shocked by what I obtained and the substantial contrast in savings between opting for what a car dealership attempts to sell you and what genuinely proves to be the most economical choice. In this video, I will break things down into simple steps for you to get a better understanding and make the right choice by exploring 4 primary methods of acquiring a car, discussing their characteristics, identifying the most cost-effective option, and ultimately examining the psychological aspects that should be taken into account. The key differences. There are 4 main approaches to purchasing a car. The first option involves buying it outright by paying the full price upfront. This eliminates the need for future payments or interest. The second option is financing, often known as hire purchase in the UK, which resembles a personal loan. You contribute a deposit towards the car and borrow the remaining amount at a predetermined interest rate for a specific period, typically 3 years. During this time, you make monthly repayments until you eventually become the car's owner. The third option is leasing, which is similar to renting. You make monthly payments to utilize the car and return it at the end of the contract. The calculations for monthly payments differ slightly from those in financing. With financing, you pay off the car's full value since you will own it at the end. However, in leasing, you only repay a portion of the car's value that decreases over time, adding fees on top. The fourth option is PCP, personal contract purchase. In PCP, you establish an agreement term, make a deposit, and the company determines the car's anticipated value at the agreement's end. This value is subtracted from the car's cost to determine the loan amount and your monthly payments. At the end of the contract, you have several choices: paying the final value to keep the car, returning the car, or using the final value to exchange it for another vehicle. Now that we have laid down the groundwork, let's delve into the detailed financial implications and costs associated with each option. To ensure an accurate comparison, I have conducted this analysis using an average medium-sized family car, specifically a BMW 2 Series, priced at £30,000. For all the options, I am using a 15% deposit of £4,500 with a 3-year term. This will make all options as comparable and easy to understand. Let's begin with the first financing option, which is hire purchase. After placing a deposit, I was quoted an interest rate of just under 11%. This leads to monthly payments of £810 for the 3-year term. Consequently, the total amount paid for the car at the end of the contract reaches just under £34,000, granting me full ownership. Now let's consider the potential resale value of the car. After examining comparable prices in the current market, it appears that I could potentially sell the car for around £16,000. On the second-hand car market, this 3-year-old car will go for a fair bit higher than this at just over £20,000. However, I believe this is inaccurate, as the price for the car can drastically change in 3 years' time, as the second-hand car market is currently experiencing a price surge. I personally believe that this inflationary trend is unlikely to persist for the next 3 years, and it is fair to assume that the inflated prices in the second-hand car market will decrease significantly. If I were to sell the car for £16,000, it means that the net cost of owning the car for 3 years would be approximately £17,500, taking into account the initial purchase price and the resale value. The next option we discussed is leasing a car. In this leasing option, assuming I make the same deposit, the monthly payments amount to £345, significantly lower than the financing hire purchase option. This is due to the calculation being based only on a portion of the car's value, and there is no interest involved. Therefore, to have the car for 3 years through leasing, it would cost me around £17,000. Sometimes, there is an option to purchase the car at the end of the lease term, but this is not guaranteed, and the actual trade-in value offered by the dealership is only known in the last few months of the lease period. On the other hand, the most popular option, often encouraged by car dealerships, is PCP. However, it may not necessarily be the best choice when considering the overall cost perspective. Let's examine the financial implications of each option in detail, using the same deposit and considering the projected value of the car after 3 years. set at £15,000. In the hire purchase option, with a deposit and an interest rate of just under 11%, the monthly payments for a 3-year term would amount to £810. At the end of the contract, the total price paid for the car would be slightly under £34,000, resulting in full ownership. However, when considering the potential resale value, it is important to note that the current inflated prices in the second-hand car market may not accurately reflect the market conditions in 3 years. Assuming a resale value of £16,000 based on market comparable, the net cost of having the car for 3 years would be approximately £17,500. Moving on to the leasing option, with the same deposit, the monthly payments are significantly lower at £345. This is because leasing payments are calculated only on a portion of the car's value without any interest charges. Therefore, the total cost of having the car for 3 years through leasing would amount to approximately £17,000. However, it's worth mentioning that although some leasing agreements provide the option to purchase the car at the end of the term, the actual trade-in value offered by the dealership remains uncertain until the final months of the lease period. The PCP option, which is commonly promoted by car dealerships due to its profitability, presents another approach. With the same deposit and a projected value of £15,000 after 3 years, the monthly payment would be around £453. If I decide to return the car at the end of the contract, the cost of having the car for 3 years would be approximately £21,000. On the other hand, if I choose to keep the car and pay the final balance of £15,000, the total cost would amount to £36,000. Comparing these figures, it becomes clear that if I opt for the PCP option and return the car, choosing the leasing option would have been more cost-effective, saving nearly £4,000. It's important to understand that car dealerships promote PCP because it encourages customers to stay with them, facilitating the upgrade of their vehicles and part exchanging them at the end of the contract, ensuring continued profitability. They may manipulate the numbers by offering dealer contributions or adjusting the deposit slightly to entice customers to choose the PCP option. While PCP might be the best choice in certain scenarios considering factors such as car value retention and flexibility, it is crucial to conduct a comprehensive analysis by looking at the total cost of the car to make an informed decision. To further emphasize this point, if I were to decide to keep the car, the hire purchase option would have been a more cost-effective alternative. Another option we discussed is purchasing the car outright for £30,000, which, assuming we could sell it for £16,000 in the second-hand market, would be the most cost-effective choice, amounting to £14,000 to own the car for 3 years. However, it's crucial to consider the opportunity cost in this scenario. When you invest £30,000 upfront, it becomes tied up in the car. Alternatively, if you have £30,000 and pay the £4,500 deposit, you would have the remaining amount available to invest in assets such as the S&P 500 or other cash-generating investments. The question arises, can you achieve a better return on investment by investing the leftover money rather than incurring the additional cost of financing options? There are additional factors to take into account, including psychological considerations. If you are someone who typically keeps their cars for an extended period, choosing the hire purchase route allows you to fully pay off your car. This eliminates the stress of monthly payments and grants you complete ownership, giving you the freedom to customize and use the car as you wish. However, it's important to note that any maintenance costs associated with the car will be your responsibility, and these expenses tend to accumulate over time. On the other hand, opting for the lease or PCP option allows you to choose a newer car with lower monthly payments. This gives you the flexibility to upgrade your vehicle more frequently, without the concern of selling it in the future or determining its resale value. Additionally, ongoing maintenance is less of a worry if you consistently trade in the cars before the warranty expires, which is typically after 3 years. However, it's important to note that you must keep the car in excellent condition to avoid incurring additional charges upon return. There are also limitations regarding modifications to the car and restrictions on the number of miles you can drive. Exceeding the mileage limit will result in an extra cost per mile. If you have the funds available to purchase a car without financing, in my view, it is a reliable option that eliminates the burden of monthly payments. However, unless you have extensive knowledge and expertise in the car market, considering buying a pre-owned vehicle that is 2 to 3 years old, already experiencing significant depreciation at someone else's cost, might be a more favorable choice. I hope this video has provided you with some valuable insights and guidance on factors to consider and how to analyze the numbers when deciding which route to take when purchasing a car. It's important to note that this analysis is focused on individual car buyers rather than companies or business purchases. If you found this video helpful, please feel free to share it and subscribe for more financial tips and advice. I'm also curious to hear about your own car buying experiences, whether it's the car you currently own or your plans for your next purchase. Thank you for watching, and I look forward to seeing you in my next video.